Alright, good evening everybody. This is yours truly, Robert. We're going to make a education video for you guys. It's the start of the new year, 2017, January 2nd, and we're going to be talking about a few trades that I took to close out 2016. Last Friday there were a few good setups. A lot of you guys saw my post on Facebook. We had 3 trades during the London Open for Friday. Had a Euro USD, a Pound USD, and a USDCAD, and we banked 107 pips on those 3 trades. 10% ROI for the day to close out 2016, with a total combined risk on equity between all 3 trades of 3.8% risk, which is absolutely incredible. My Euro USD trade, I had a 14 pip stop loss with a 40 pip take profit. That's over 3-to-1 reward to risk ratio. The Pound USD trade, we had a 14 pip stop loss with a 35 pip take profit. That's over 2-to-1 reward to risk. That's about 1.4% risk on equity. And then the USDCAD trade that I did, we had a 10 pip stop with a 32 pip take profit. That's over 3-to-1 reward to risk ratio, and that's 1% risk. So I want you guys to understand those numbers and the importance of becoming a precise trader that doesn't need to risk a lot of money to make a lot of money in Forex. I know there's a lot of traders I see on the internet, on Facebook, who talk about risking 5 to 10% per trade. I just risked 3.8% on 3 trades total to make 107 pips in 5 hours. Okay, I want you guys to really let that sink in before we go any further, because that's where you want to get. Not risking a lot and making 30, 40, 60 pips, okay? Having trades go 2 to 3 to 4 to 5 reward to risk ratio, 5-to-1, 6-to-1. When you start holding trades like that, that's how you become a millionaire. If you can do that consistently every single month, you will, in time, I swear to God, have a lot of money. It's not about risking 10, 20% of your money to make 10, 20 pips. That's silly stuff, right? There are traders out there online on Facebook that I've seen who claim that if you don't withdraw $10,000 from your trading account, you're not a trader. Well, if you can't consistently do, this is what I consider not being a trader. If you sacrifice 5 to 10% equity for a trade and you can't even pull 40 to 60 pips out of that trade, you're not a trader. Okay? If you're risking more than 5% per trade, you're not a trader. I want to see people risk fractions of 1%. I know traders that can risk 0.5% of their account and make 4-to-1 reward to risk ratio on that. Okay? Think about the stop loss that you have to use to do that, right? 1.4% risk, the way that I trade with one lot, that's 14 pip stop loss. If you're that precise, where you can take 40 pips out of the marketplace using a 14 pip stop loss, that's a trader. You don't need to withdraw $10,000 out of your trading account to be considered a trader. Anyway, so that's my rant. I know I have a lot of new subscribers to my videos, to my teachings, and this is kind of an intro. We're going to play live right now how the 3 trades panned out. You're going to see it happen live in action, okay? And before we get to the video, the live video of the trades, I just want to show you right now what the marketplace looks like on Monday, 10/22, after the aftermath of what I did. So I have not marked up the charts any more than what I did last Friday. This is the first time I opened up MetaTrader 4 since Friday when I closed out the trades. So you're seeing what happened was, I'll give you kind of the rundown. This is a dollar. My whole premise for deciding to long foreign currencies on Friday was the fact that during Thursday, going into Friday, we had the dollar run up to close in this massive gap here. Okay, that's a liquidity void, and it ran up, closing the gap, and then we violently pulled away from that after the gap was filled. And there's directional premise in my mind for that day that we would be bearish with the dollar after we closed in the gap. So understanding that we're looking for bearish activity in the dollar after it closes in the liquidity void here, that's going to give me an entire day's direction with what to do with foreign currencies, and that would be longing foreign currencies, the Euro USD, Pound USD, and taking a short in USDCAD. Basically, you're buying foreign currencies over the US dollar because a dollar here is supposed to be weak. Now, at the time of the recording, you're going to see that this is actually how I was looking at it. I was watching it come up to fill in the gap, and that's what I was predicting here. You can see we filled in the liquidity void right at the kill zone, about 10 GMT on Friday, that London Open, which we would then expect a bearish dollar, and you can see the reaction after the void was filled. And here's a USD, Euro USD, the fiber, okay? What we saw happen in the dollar was rallying up to close in the void. Therefore, in the Euro USD, same time, we should see it declining. And what's it declining to? Well, the dollar is declining. The Euro USD, the fiber is declining here to run out these stops right here. This was the Asia session low, and we have a big liquidity void here as well. This is a liquidity void that needs to get closed in. Now, it closed it in during Asia, which formed the low. Then we rallied off the low, came up, and then going into the London Open, you can see that price traded down, swept the low. Now, usually run-on stops are 10 to 20 pips, and we see that right here. We swept the low just exactly, let's see, what do we get here? About 5 pips or so. We run that low, and I got in right here where this blue begins. This is where I bought. Got in at 105.09 territory right here. This is what we call a bullish turtle soup pattern. It's a false break below a low to grab the stop orders that are resting down here. If you were a buyer down here on one of these lows, if you bought down here and you saw price make this failure swing and then rally away, you would move your stop loss right here, okay? And that would be a sell stop. Buyers willing to sell their longing position. Now, who would they be willing to sell to? They're going to sell their positions to the market makers, the banks, who are organizing this move right here downward before moving up for the rest of the day. Okay, we know that from my other videos and from my mentor and his teachings, Michael Huddleston, we know that the banks move the markets. We know that before the banks engage in any sort of move, they have to pair orders. And the way you pair orders in the marketplace is you move to areas of liquidity. And the first area of liquidity down here is what's resting below the low right here. Those would be sell stops for any long position holders that bought somewhere back here or even further. They'd be moving their stops right here. Those stops would get triggered and they would basically be sold to the market. The market makers would buy them, and then they get the liquidity that they want. They take retail traders out of the marketplace and the funds out of the marketplace, and then they rally up for the day. And this is an organized move. We know this is a Judas swing, part of the average daily range concept. A false swing down, it gives the interpretation that it's going to be a bearish day. It dukes in retail traders into selling, which is not what you want to do, because this is an organized move just to run the stops for liquidity. And then we see a huge reaction off the low here, straight up, and we got out of the trade right here. The first area of liquidity that we would take a position off would be this high right here, because what's resting above the high? Well, if you sold up here, you would have a buy stop up here. You'd see it rally up, fail to go higher than that, trade away. You'd move your stop loss from wherever it is over here down to here. That's the first area to take profit. and that's where I got out because that was exactly 40 pips from where I entered. Good 40 pips, that's easy, and you can see we hit it pretty effortlessly and kept going further. Could have held it for about 90 pips. Okay, that would be the daily range. That was a high of the day. This is a low of the day, so I got in at the low of the day and got out just midway between the average daily range there. We also had a fib level, obviously, here. It's pretty common sense to look at that. We trade down into a severe discount. So that is the euro trade in a nutshell. We risked 1.4%. This is my stop loss. The stop was right below the red here. Right here is where the stop was. This is where I entered right here. So that's a 14 pip stop loss, and then we hit our take profit there. 40 pip take profit, 3 to 1. Okay, moving on. Pound USD, same thing. We see it trading down. That's because the dollar at this time was going up, and we're closing in this liquidity void between this high and this low. There is a void in the marketplace because there was only buying that happened between this low and this high, because you have a black candle here, down candle here. Between these two down candles, it was all buying. Okay, there was no selling. Okay, so what do they want to do? They want to reclaim this territory in here. So they bring it down, they close in liquidity void, and right when the liquidity void closes in, we get into our long position. Now that's also a optimum trade entry. Okay, if you draw your fib level here, we do trade down to 62% retracement level, so that it is an OTE level as well. And we got in right here at about 122.72. Our stop loss was 14 pips right down here. This is where the stop was. We trade away pretty effortlessly again. We get out right here, 35 pips, and it just kept going up for the day. We could have held this for about 110 pips or so if we continued to hold it. But we got out there. The next trade was USDCAD. USDCAD, you're going to see the opposite happen here because the dollar is first. So if you want to buy foreign currency and short the dollar, you'd actually be selling the USD-CAD pair. So that's because the dollar is first in the pair here. That's a pretty simple concept, but some people don't know that, surprisingly. So as a dollar was bullish, as the dollar was bullish during the start of the London Open, we see that the USD-CAD was also bullish. We're trading up here. And what are we trading up to? To run the high here. We had a bearish turtle soup pattern, a break above an old high to grab any, think about it, if you sold here, right, you sold the marketplace, you move your stop here, it's a buy stop. Okay, so the market rallies up, your Judas swing sweeps the high 10 pips or so above the old high. It grabs all those buy stops. Those buy stops turn into market orders to sell to market, to the market makers, who then engage in their short positions. Okay, and we got in right here, right above that high. As soon as the high was swept, we sold right in this area here, and we traded down. We got out right here at 32 pips, and then it continued down for the rest of the day. And if we look, the low here, this was about a 94 pip move. So we got in at the high of the day, got out pretty much halfway through the day on its average daily range. We risked 1%. That was right here. This was 10 pip stop loss. Came close to it on this candle here and this candle, but usually we don't run too far above the high, and I felt comfortable. I saw a pretty nice reaction here to go down, so 1% was good. We didn't get stopped out. 32 pip take profit looked good there. So now what I want to do is, I also did do a USDJPY trade, but I cut the video short before this one hit the take profit because this one took a while. If I zoom in here and really show you what happened, same thing, USDJPY. We're trading up to a bearish order block here, and there's also a bearish turtle soup pattern that's happening. We're running these equal highs right here, 10 to 20 pips above these equal highs. We ran these highs for any buy stops that are above here, and we continue to trade up to a bearish order block right here, which is where the market makers do all the selling before this massive move down. It's an ICT concept. You can refer to his videos about order blocks. I may even link them in the description, as well as the turtle soup pattern and whatnot. Anyways, got in right here on this candle, used a 20 pip stop on this one, about 2% risk, and we don't hit our stop loss, but we do come a little close to it. I put the stop loss just above the order block here, knowing that if it did want to trade up to the order block, it's not going to penetrate the mid threshold of it, the 50% retracement of this bearish order block here. So we put the stop there. It comes up. We have buy stops triggered down here, which propel the marketplace up into the bearish order block, where they then take their short position. So we trade down. We do get a New York open retracement. We do trade up back to the London bearish order block here, which we then trade away. And then the take profit was down here, 68 pip take profit. You can see stabbed right to the end, right there. I put the take profit level about 10 pips outside of this low, knowing that price, if I shorted here at this area, where am I looking to go? Underneath this low, because that's the next area of liquidity, and we have a run on stops, usually 10 to 20 pips. So I placed it about 10 pips under the low, which is also right at the top of this bullish order block right here. So it worked out well, very well. This was actually very surprising to me. It just hit it to the exact pip, but you're not going to see this in a video, but you'll see me draw everything out. You just won't see the take profit get hit in the live video, but that's why I'm showing you in the aftermath here. We did hit it. So we're going to go to the live video now after I kind of explained the trades, and we're going to just kind of play through this, and I'll kind of annotate things. Everything gets annotated. You'll see it live as it happens, and this is something that you don't get with most of these Facebook traders and these trading groups and things like that, is nobody can show you live what's happening. It's always the aftermath or this and that, and you know, this is something that I've grown fond of doing, because I realized that nobody can really do this. You know, they talk the talk and try to walk the walk, but when it really comes down to it, they can't really prove that they know anything and they can call the market. You know, there's a difference between getting lucky and then really instinctually knowing what's going on in the marketplace. And you're going to see right now, live in action, those three trades pan out. Okay, and this is, you know, trading to me, the way my mentor put it, is you need to approach it as if you are a scout sniper, like a Marine scout sniper. You do not trade unless you know exactly what your target is, when the target is going to come into your field of view, and you don't take down the target if you don't know where the extraction point is for that mission. And all this, you know, when I mean, what is your target? Well, where are you going to get into your trade? What's the entry, right? When is a target going to arrive into the field of view? Well, when is the entry point? You know, what are your times a day where you're expecting the entry to occur? What kill zone? The London Open, New York Open, what's going on here, right? And where's the extraction point? That's your take profit level, right? You do not trade unless you know these things ahead of time. That's what creates professional traders. Okay, and you're going to see that happen live as we speak. So we're going to play the video. It is sped up to about 500 times the normal speed. You can see in the video down here the time. This is midnight. We're seeing that liquidity void fill in live, real time as it's happening. You can see this is December 30th. That's the Thursday, or the Friday, excuse me. You can see the reaction there. This is when I got into my long position on the fiber. We're longing foreign currencies. You can see the buy order was just placed there. Once it filled in that liquidity void, ran the stops there. Trades to a discount. I showed you guys the fib level that we hit. We went to a severe discount there. And you guys can see I'm completely annotating everything live in action, and everything is left the same. You can see these are the exact annotations that I just showed you in the aftermath, okay, at the beginning of this video. So this is now the pound, the cable. We fill in the liquidity void there, which I draw out pretty much to the pip there. We get into our long position. You can see I already executed it, and we do trade down to that sweet spot, the 70.5 retracement level. And here's USDCAD. We ran the highs out there for all the buy stops. We do have a reaction. You can see the reaction there. We get into our short position. USDJPY, same thing. We run the equal highs. It trades up to that order block. You can see my if you look, let me pause. Let me see if I can pause this. You can see right there the order was right at that bearish order block. That's where I had my order. We run those highs. This is a perfect market maker trap. Here's the cable. You can see the reaction there on the cable. Nice reaction. When you see it react like that, when it gets to these areas, guys, you know, when it gets to these areas that you're calling out, that you're expecting it to get to, and then you see these types of reactions unfold, like 1, 2, 3 bullish candles, it's a lot of confidence. It's so much confidence because you can then look back and go, you know, I know what's happening in the marketplace. I understand what's happening. I know why it's happening. And I know that because look at what price is doing, right? This is essentially where you need to get. Most traders on Facebook, they put orders in there and they're literally hoping, whether they want to admit it or not, they're hoping, because there are people out there that still believe that the markets move based on animal patterns in some mathematical algorithmic indicators. Like, and that brings me to another thing. At no point in time do you see me use an indicator for this. You're seeing everything happen live, in action, no indicators, no algorithms, no harmonic patterns, no bullish bats and bullshit. That stuff does not work. I don't understand why people still use it. I mean, I've been preaching this for so long, and you know, this is not my first video or my first rodeo where I show everything happen live without indicators. Complete naked charts. That's what you're seeing right here. Complete naked charts. The financial markets, over $5 trillion marketplace that we're dealing with, called Forex, moves completely based on time and price theory. That's it. It's all about price. And where's price at right now in regard to, you know, previous important points in price action. You don't need indicators. You don't need animal patterns. None of that stuff works. And the sad thing is when one of those patterns does work, people trick themselves into believing those patterns, okay? And it is not true. Those patterns I can show you 1,000 times fail. Over and over and over, I can go through a chart and show you 100 times of one of those patterns completely failing and not holding true. And that's the thing. When you lose a trade and you get stopped out of a trade and you can't go back and understand why you got stopped out, you don't know what you're doing. And that's the thing. When these traders that use these harmonic patterns and things like that, when they get stopped out or they lose a trade, they never know why. Because they don't know the marketplace. They don't know how to trade. They're caught with their pants around their ankles. Anyway, so going down a little rabbit hole there, it is important to know that everything here that you're seeing is done live without indicators. It's so huge. People don't believe me, but you do not need indicators. You can see what I'm doing. What I've been doing is I've just been modifying the trades, putting in the stop orders, putting in my take profit orders, because ultimately my goal is to set the trades up and then turn the computer off and go walk away. Go sleep, do whatever I do, you know. Essentially what I did for this video, I was up for the whole thing, but normally my day-to-day trading and things like that, I set my orders up, I put the take profits in, and then I leave, and I wake up in the morning and boom, we have profits. You know, that's the best feeling in the world. So you can see here USDCAD. USDCAD was actually the last one to hit the take profit level. It took a little while for it to kind of decide, okay, I want to go down. You'll see that here. And I think the first trade that hit the take profit was fiber, and then cable, and then USDCAD, and then the JPY actually hit that take profit during that New York session. Right now I'm just drawing. This is how I figure out quickly, like, my reward to risk ratio. You know, I draw a vertical line between my entry and my stop loss, copy that vertical line, and just add it up above my order to where my take profit is, and it gives you a good visualization of your reward to risk ratio. You know, how much do you plan to make in regard to how much do you plan to lose? And it looks good for the video too. People are visual learners, so you can see clearly here that's 3-to-1 reward to risk ratio. 3 blue candles there to 1 red candle, that's 3-to-1. 40 pip take profit with a 14 pip stop loss, I believe this one was. Yep, 1.4% risk. That would be 14 pips stop loss. You can see the reaction there on the dollar. That's exactly what we're anticipating after the liquidity void or the gap was filled. And now I'm getting confident. And especially now that I see there, you saw the fiber rallying up quite a bit. USDJPY, again, taking its time, you know, to develop. The pound, really nice reaction there on the pound. You can see that after it closes in that liquidity void and it runs the stop, it gets those stop orders out of there from the retail traders that keep their stop below the low here. You have a nice reaction here. This is not random. I'm telling you right now, this is not random, and it did not form because of a harmonic pattern or because of an RSI or Williams %R or a stochastics. This is time and price theory. The market makers paired orders, and they have directional premise for the day, and it's during the London Open, logical time in the day, and you're seeing the London Express happen in front of your eyes, and in shortcoming, you'll see the take profits get wiped out quite effortlessly, considering that most of these were 90 pip days, and I only got out at 40 or less. Okay, and I'm not a greedy person. I usually try to get out at 30 to 40 pips, knowing that the average daily range between the low of the day and the high of the day is about 90 pips, and I could easily get 60 or 70 out. I just don't like waiting that long, to be honest. I like to be out of the marketplace in 2 to 3 hours or so and be able to say, look, I made 107 pips in about 4 hours, risking, you know, 3.8%, you know, risking 38 pips to make 107. So you can see everything now just panning out. I think what I do, if I can remember from Friday, was I kind of minimized the charts, put them all 4 of them together. I wanted to get into the beast, but I missed the entry on it. The entry on pound JPY, I missed it. I got to my chart late, and I didn't want to get into a late move, but that's why I had the chart up there. I kept looking back on it. I was like, shit. See, I keep going back. I'm like, damn, I missed that move, but that's okay. You can't get them all, and you don't need to get them all either. I do apologize too. I am sick. I'm sure most of you guys can tell. I did get a cold over my my New Year's here, so that's why there's some congestion in my voice, but it kept me bedridden for the last couple days, so I finally decided, since I'm in bed and I'm staying home, keeping it low, I'll get this video done for everybody. So you can see now the pound, we're about 20 pips or so through the move into really good profit. One thing, when I look back at this, what I could have done was move the stop to break even. That's something that I could have done on this trade right here. We would have been fine. That would obviously mitigate the risk to zero. You're in a risk-free trade. So when you look back in hindsight, these are the type of things that you realize. I not only record these sessions live to show to you guys and do educational things with them, but I also do it because it gives me a chance to look back on my trades and kind of analyze it from a second, perspective. Being able to look back on the trades as they panned out 2 or 3 days later. Now I see things that I should have done a little differently. Right here, obviously I should have mitigated the risk and moved my stop to break even. So that's something that I learned from looking back on my videos here. A lot of you guys are familiar with my work, all the concepts shared today, the turtle soup pattern, the order block concept, and the average daily range concept. It's all product of Michael Huddleston. He is my mentor that I learned, real trading from. Price action trading, understanding how things really work here. His videos are in tutorial format on his website, the Inner Circle Trader. They're all free to download. I'll put the links in the description down below so you guys can go check them out. He does offer a paid mentorship program, but it is closed indefinitely. I know a lot of you guys are involved with it that watch this. I know a lot of my close followers of mine that I got onto ICT are in the mentorship program, so we all love it. That's good stuff. So let's see if I can skip around here. I don't want to make you guys wait too long here. I'm just going to kind of move through. This is when it starts to get really fast. I think I moved it up to like 900% on the playback rate. So you can see down here we're at 12:44 a.m. same day. And now the trades are really starting to move a little bit. The pound, you can see we have fiber on the left, pound on the left, CAD on the right, and JPY on the right. So these two we're expecting to go down. These two are expecting to go up here. And you can see them. They're moving quite nicely now, especially the fiber. The fiber really took off. You'll see that. Here we go. Let me skip around just a little bit. Getting Facebook messages here, excuse that. We're going to move around a little bit more. So here's the fiber. You can see now the fiber is really taken off. Same with the pound, and the CAD's starting to do something now. This is institutional order flow right here. When you see this begin to happen at this rate, this is institutional order flow. This is confirmation that you are trading in the direction of the market makers, the people with all the money. We know that the market makers are the ones that move the marketplace. Everything on here is not because of retail traders. It is all because of the market makers, the deep pockets, the people with all the money. I'm going to skip around even more. Try to make this video short. We're at about 33 minutes in. I don't want to keep you guys too long. Oh, skip too far ahead. That was a little spoiler. I'll kind of be quiet and kind of let it pan out. You guys can see now the fiber's getting up. There it goes. It smashed the take profit level. Order's done. That's 40 pips booked right there. And 120. I'll pause it. You guys can see down here. So we got into the trade at about midnight. 1 hour and 20 minutes later, we made 40 pips. Okay, it's pretty good. You can see now the pound is rallying quite nicely as well. Let me see if I can go a little bit forward here. There's the USDJPY starting to go down now. Oh, skipped a little too far. So this is a pound. Obviously, we'll go. Man, it's hard to catch this. I'll just leave it here. So you can see now the pound's going up quite nicely. There's the institutional order flow. They're moving to area of liquidity, which is above the high here. That's why my take profit there is set there. There's a high. They want to move above the high and sweep the high. So there's a reason to get price to that high. That's why you see, intention here. These candles, the way they're moving, that's intention. Institutional order flow. So that's 35 pips booked there. So we got 40 and 35 pips done for the day already at 134. So an hour and 30 minutes, we are at 73 pip profit. Or 75, excuse me. USDJPY, again, you're not going to see USDJPY hit the take profit in this video because I cut it short because I didn't want to record that long because, recording live your screen for 4 or 5 hours, it sucks. It's a lot of gigabytes of video storage you're recording there, so to go through and edit it and process it, and compress it is a little tricky, so I don't like to run it over like about 3 hours on the screen capture here. You will see USDCAD hit the take profit though. This is it. So you can now see USDCAD begin to move quite a bit here. Got close to my take profit and then traded away here. And we'll get to the end of the video. You'll see what they're doing right here too is this little move right here, a failure to get below this low, and you see this little rejection here. This little pause in price action actually will entice people with long positions to move their stop under here because they go, okay, you have a failure here, failure swing here, we move up, we trade down, and it fails to break the low, and now it trades away. Well, if anybody that didn't have their stop loss here already, now they're going to move their stop loss under here because they see it failed to get underneath it. And that is a complete trap. It's the market makers trying to get more orders underneath the low right here. They want to get more stop orders under there. Sell stops. That's what they're trying to go for right now. Because that's how they work. They move to areas of liquidity. We're almost to the end of the video here, about 2 minutes left. You'll see it will get hit here. I'm just going to skip over there. It's about to happen. We got to cover the spread, so it's got to go beneath the line just a little bit more. Almost. Let's see here. And there it goes. So there's the run on the stops there. Take profit level is hit. And here I'm just annotating the fact that we have the New York Open retracement back to the London session bearish order block. This would give you a second opportunity to get short in the USDJPY. In case you missed it during London, you could get in during New York because it just trades right back up to the same level. And that's it. So that is basically the conclusion of the educational video from last Friday. These were the last trades that I took to close out 2016. Those are actually the last 3 trades that I placed, and they were all winners. You can see here, this is my post. You can see all 3 here, right to the take profit levels. Very, very nice day of trading. Nice conclusion of 2016. We're going to cut the video here. If you guys have any questions, comments, or concerns, you guys know how to reach me. You guys can email me, reach me on Facebook. Most of you guys have me on there. I hope the video was, of help to some of you guys to see that it is possible, what live trading looks like, that it can be done without indicators, and it can be done with just price action, naked charts, and what professional trading looks like. Understanding risk management, where to put take profit level, stop loss orders, and just how trading pans out over a session, over a trading session. So I hope it offered some insight to you guys. I really do hope that this helps you in one way, shape, or form. And feel free, again, to email me. I get a lot of emails from a lot of you guys. And one thank you, the biggest thank you that I have for 2016 is to Michael Huddleston. He is the guy. He is the mentor. He is, the person who taught me everything that I know. Everything that I use in this video is a direct result of his teachings, his education, his courtesy, and his kindness, and his interest in other people's success. So check him out at theinnercircletrader.com. That's his site. You can just type in Inner Circle Trader on Google. You'll find his tutorials. Work through them. They are all free, and trust me, you will not regret it at all. It will open a lot of doors for you in your trading and just take you to the next level. So with that being said, have a good night, good day, good morning, whatever time it is for you, and happy trading. Take care.